Okay, so been a while, other than a bit of random posting on Twitter. I have still been following the markets, still been trading the markets, albeit not as much. But I'm looking to get back into it on a more continual basis, more full-time basis. So at the moment, my interest in the markets has been piqued by what's happening in natural gas. If we really zoom out on the monthly, then you sort of get a view something like this. And what's really interesting is the blue channel going down here, and the red channel going across here, catching these key levels. You can see that we've had now a third tag on the bottom of this red channel that was also coinciding with the point of origin of the move up to $10. So that was a nice coincidence. We had a 1, 2, 3, 4, 5 waves down after a 1, 2, 3, 4, 5 waves up. So this would, I suppose, lead one to believe there should be then another 5 waves up move, potentially higher, potentially to stop this red channel. Not that I'm an Elliott wave-atician at all, to any extent, but the basics are always good to know. This was not a 3 waves down. It was a 5 waves down, but it was a 5 waves up. So we had impulses in both directions. So impulse to impulse to impulse. Maybe I should leave Elliott wave alone. This is all beyond my area of non-expertise. We could go lower. The bottom of the blue channel is sort of 1400, 1300s, and then we've got if we wanted to take this wick from back in 1991, we could come down to 1000, 1050 sort of area. But what was of interest to me is we've got a nice divergence here on the momentum of price and volume trend. We've not quite got a positive divergence here, but we are in the green zone, the overextended zone. Not as deeply as here or here or here or here in 09, 11, 16 or 2020. But we've seen that 5-wave structure down. We've seen us falling off, a dropping off of negative momentum, and we've got a positive divergence here, even on the monthly. And we've coincided with the point of origin of this move and the big red long-term trend line. So I thought it'd be worth a shot to the long side. Here we see that in further close-up. Again, if we bring back our indicators, it's far more obvious. Here we do have the positive momentum divergence, and here we've got doubly so in the momentum of price-volume trend. And we've actually just closed over the 14 moving average for the second week running on the RSI on the weekly. And there's that 5-wave structure down again. So I thought, well, this piqued my interest. It's definitely worth trying to get on the long side of natural gas. And so that's what I've done with my, again, very small accounts. So we are more or less back at square one. I've taken out a long position in natural gas. I'm long from, well, you can see, 1880. And this is where we are presently. We had a head, a left shoulder, a right shoulder. We came up and tagged this red line here that was the breakdown of this distribution, that was the wick top here, that again we got the overshoot, we tagged on the underside, tagged on the underside, tagged on the underside, fake out, and really what I want to see now is a stay above 1940 as the a pivot that should be held now rather than faked through or tested deeply. I would now expect, if there were any further upside on the way, this to hold. Did we skip the daily? Yeah, the daily. We skipped the daily. Here's our trend line breakout back test. So the action on Friday was the back test, also the back test of the 5 and 14 moving averages on the daily. So we do have good grounds potentially for this to resolve further up. We've got the anchored VWAP from the lowest close, acting as resistance, fake out, support, support. So we've seen it transition from acting as a fake out point or a resistance point to a support point. We've got some longer term VWAPs up here, one that captures this high, one that captures this high, ones that capture these highs, and this was the fake out. So these VWAPs are also worth watching, I think. And maybe we're going to move up to test the blue one, the light blue one first. We could take out this wick here. I'd be expecting a move up. It looks at the 4 hourly. Look at the hourly. There's the inverted head and shoulders in more detail. Here is the big spike down that led to the spike up, that led to the retracement. And a gradual, what we don't want to see is this being a bear flag and then us dumping out again, or continuing the down move to 1,400, 1,300, 1,050. I want to see a shift in polarity. I want to see these levels that were previously pivot areas be launchpad areas now. You want to see that roll reversal in natural gas. Stocks. We start on the daily. Well, no, actually, let's start on the monthly. Because on Twitter, earlier in the week or a week ago, I identified that while we were up in here, we were caught under the trend lines from hell. I said semiconductors were in this triangle from hell. And that Nasdaq was in this range from hell. So this is a very long-term resistance that we've caught ourselves under here. That it's mega trend lines that fit the top of 72 with the low of 87. That fit the top of 2000s with the top of 2019 with the low of September 22, and they're lines of angle that fit. They just fit. They fit the market, and they fit from significant points. And so I projected a couple from the top area here, and lo and behold, this is where we entered under the trend line from hell, and we've distributed down, and we've got a great big pivot now on the monthly at what level is that? 5100. Is that thick enough? Probably. It's probably already thick enough. That's the monthly pivot. The weekly, you can see the dying off on the momentum of price and volume trend, although price momentum kept up all the way right to the tippy top. But there were other indications. If you were following breadth and internals, there were other indications that something was rotten in the state of specs. And again, we see the polarity flips. Bottom becomes a top. Low becomes a high. Then we've got the distribution. We've got the 1, 2, 1, 2, 3. Clear move down. And this seems to be indicative, at least for the time being, of a clear change in trend. So the market can do what it wants. It could reverse tomorrow. Well, not tomorrow because the market's closed, but it could reverse immediately and go up to 6,000. But the evidence that the way price is behaving, and again we'll look at the other measures of breadth and market ratios and so on in a second, pointed to a change in the character of the markets, and that's exactly what happened. Excuse me, sorry. And here we have, if we go all the way down to the hourly, here we are. The dollar on the daily. Again, has it got high enough? Will it be driven higher? To be determined. You've got the 5 moving average at 10,571. That's always good to keep an eye on. Silver, it's terrible really, because obviously I was all about the silver for so long, and obviously all they did was fuck around for the last few years in this box and cause us all a lot of pain. And then it's done this. It's moved from 22 to 29 in 2 months, in less than 2 months. It's been quite the delicious move. So basically what was torturing me was, well, how long have I been tortured by silver for? Probably at least that long. This was just the box of pain, and then we've finally taken off, and I've not been there for it, and I've, fucking silver. So I'm not even in it. I spent all this time thinking about how silver was gonna moon, and now it looks like it might actually be doing it. I'm not here for it, but I am in natural gas. So natural gas is my goodbye silver. You are not my friend anymore. Natural gas is my new best friend. We'll see. Head, shoulders, neckline, breakout. I mean, it's over the 5, it's over the 14. Is it getting a bit extended? Yes, but could it keep on going? Yes. So this is the annoying thing now. If you want to buy into it, you're going to have to be looking at those lower time frames and throwing orders on and hoping that it doesn't decide to do a great big, juicy retracement. What? Come on, work. There we go. And whatever. Because you can't buy low anymore. The lows were down here. So now you've got to buy high, but you've got to buy on what looks like a low on a lower time frame within the overall uptrend of what you assume will continue on the higher time frame. And it's just, get down on the hourly, maybe even the half hourly, the 15-minute, and look for those reversals, look for those whatever shifts in momentum on a lower time frame to get in. So here's the half hourly. There's a positive reversal. Have we reset sufficiently? Yeah, maybe. Get long with stop down here. Yeah, so here's the range from hell in semiconductors, and this looked bad. This looked bad, and again, look at this. Look at this. On the monthly. So not only the longer term negative divergence, but the local negative divergence, the long term negative divergence, the, channeling, flagging. I mean, it does look ugly. It does look ugly. But you could have argued that for a lot of the run. I understand that, and obviously we're above the moving averages. The trend-o-matic is still green. But it does have a certain discomforting look to it. There's your 1, 2, 3, 4, 5. There's your 1, 2, 3, 4, 5, if you want to count the waves. It's a little bit disconcerting. Not that a bull market can't resume and blow all our heads off, but it is disconcerting to see. And again, we're fitting lovely channel action right at the top of the channel, rolling over. Yeah. I mean, how can you not be sell biased? Below 21,720, sell biased. Sell biased. I mean, what is that to say? Oil was supposed to be, going to 200 or whatever. No sign of that yet. We're in the range. We're in the quote-unquote real range of oil. The old real range of oil, if you look, used to be like that. Up until the turn of the millennium, the real, anytime oil was at 13, it was a buy. Anytime it was 32, it was a sell. And then the middle was 21, and you just wait for it to go to the top or bottom of the range. And we've sort of rearranged. We've had these extraordinary moves to the downside. I understand that. And you could make the argument that the real range low now is 33. The real range high now is 110, and then the real middle of the range, if we thicken that up, is 60. But within that, within that, we've also got an attempt to rearrange again, with 62 being the lower end of the range, which would make this the new middle, which would make the new high up at somewhere around 190-200. It looks like it's trying to rearrange. And this extreme low was the extreme low, and then the only time we retapped the old low of this range that was the top before 2000 and the bottom after 2000 was in October of 2020. And since then, we've only touched the top of the new real range and the middle of the new real range. So either we need to go down pretty quick and re-establish this as the real low of the real range for this period of decades, or we're going to rearrange, and this will be the low of the real range, and this will be the middle, and there will be a new high of the real range for this new period of time, for this new epoch, whatever you want to call it, is my basic theory. Oh, that's ugly. That's ugly price action. But still, just a theory. This is not a good look. Yet, again, as long as we can hold above, what's that, like 78? It'd be really good if we could hold over 78. That would be bullish. Go down on the weekly. All kinds of resistance, and we've just shut out. We've just shut out a bit. You know, we had this breakup out of this channel. We did have the big reversals on the weekly between this low and this low, but it's been chugga, and then we got 1, 2, 3, 4 fast candles, and then we just immediately backed back down. So again, if we can retest the top of this yellow channel at 80, that wouldn't be the end of the world. Again, as long as we stay above like 77.5, 78, maybe even down to sort of this old high here at sort of 75, 76. Otherwise, we could be going back down to 62. We could be going back down to a real collapse, down to 35, 36, and this re-establish this as the low of the real range. I don't have any special insight for oil. We'll look at internals. But if it can explode out over, again, the pivot on this candle is $82.38. So if we can explode out above that, we still maintain just a slightly higher close in spite of this wick being eaten all the way up from 85 down to 82 again. Any move back above that would be a strong and long signal to me. And again, if you're into the positive reversals, here's our lows here. Big time positive reversals. So there is some explosive potential here on the daily, but that's the setup. It's very precise. This is the line in the sand. That's the setup there. And again, we'll look at some internals and some whatever, some ratio charts. Sorry, not internals, ratio charts for oil in a little bit. iShares 7 to 10 year bond ETF. So this is inverse of rates. Rates have been going up. This has been going down. On the monthly, that's a negative reversal. That would be indicative of downside. It's saggy and flabby. It's, this is not a power move. We're not returning to the point of origin of a power move. It is a point of origin, but this is a doji. We've come into this doji, this point of origin, this fast candle. That's what we're testing on the weekly at the moment. Yeah, I mean, nothing to write home about. The daily, we came into the bottom of this sort of channel. I mean, we've had this deviation, so does that invalidate it? You decide. And again, this is the doji on the weekly. That is the 61 to 78% zone on the fib, and the fake out of the channel. But it's going to have to move up pretty pronto if this is going to be a low. It looks flabby and weak in general to me. And there's not a whole lot of getting around that on any time frame. Yeah. Who knows what's happening with rates? I don't. Dollar yen's an interesting one. Because it looks absolutely rip-roaringly strong, with no signs of stopping. Top of this channel would be 169, 168, 170. So there's the whole area between this low and this high that we're coming into. Is it ready to turn? I put a big buy signal here on February of last year. Look at that. Ah, there we go. Pity I didn't pity I didn't spend the last year trading dollar yen. Oh dear. I was right. Do you see? I was right. Oh dear. Yeah, so overall blue skies. Again, the issue is with buying is, you're not buying low. You're buying in the middle of a rip-roaring up move that could, collapse and fail and retrace horrifyingly at any moment. Nasdaq looks shit. Brent, similar to Thingamabob. Back to natural gas. I was searching for the natural gas tag on Twitter, see if there's any experienced, some wise heads out there that know about natural gas. And someone was saying, well, the wisdom tree 3 times leveraged daily natural gas is so low. It was up at 150, and obviously this is just the June contract. If you could see, the rollover going back in time, it goes up to completely ludicrous levels, hundreds of thousands of points, and we're down at like 8. So you could just put your money into this, and like at some point, you can sell granny. And I said this whenever I was doing these videos before about natural gas itself. I said any time it gets down to like below 2, sell granny, sell your house, dump it all in natural gas, and just wait for it to go back to, 5. That's not unrealistic at all. It's definitely going to go back to 5, and it'll probably go back to like 7, 8, 9, 10 at some point. If it's, you've got to might have to wait a bit longer for that, but certainly it can go back to like 4, 5, 6, 7, no problem. So sell granny and put her in natural gas. So I was thinking, should I try and get in this 3-time leverage? But I don't like ETFs. They close. This is a London-based one, so it shuts at 4:30 in the afternoon, and it can gap around and be all fucky. And so I was thinking maybe I should stick with just the actual continuous natural gas derivative rather than trying to play my hand at 3 times leveraged natural gas ETFs. They do call natural gas the Widowmaker. It's quite an adorable nickname. Doubly so, I suppose. Doubly true. If you win and you make lots of money, your existing wife, you'll be able to leave her for a better upgraded, more attractive one, and she'll be a widow. And if it all goes wrong and you lose all your money and you're a penniless hobo, she'll be a widow as well, but she'll be the one divorcing you. So it is the Widowmaker. I like that quite a lot. Let's have a look at these charts. I was on about these ratio charts, these breadth charts. See if we can shine even a dim little bit of light onto the action of the markets. 18th, no, we need the 19th, we need to update, all of these. Yeah, so instead of I've not been trading as much. So I've been spending my money on like consumer goods and things that I need repairs I need to make to my flat, and new clothes and bills and all sorts of things. I should have more to show for it. Somehow I can't spend that much money on just like random crap. I've still been obviously like losing some money trading because I've until I gave up trading silver. Then, of course, the moment I gave up trading silver is when it did what we all wanted it to do, and that's been frustrating. But hey ho, never mind. I shouldn't have been trading it anyway. Far over leveraged for what I was trying to achieve, or what I should have been trying to do with an account my size. So just stupidity, and But I'm a rat. I'm a rat in the rat race, and I want to get out. So it's hard not to be reckless. It's hard not to be driven by desperation and hope, and cortisol and adrenaline and nervous frenzy and wish fulfillment. I used to think I was quite a rational, sound of mind person, but I mean, if you ever want to face that illusion about yourself in the mirror, then trading is the hobby to take up. Anyway, so here's the cumulative NIAD. You can see the 5-way structure: 1, 2, 3, 4, 5. Head and shoulders. I don't know if we were getting a divergence. Come on, it says inspect. There we go. There was the high. Yeah, so it didn't diverge, but I mean, momentum-wise, obviously you've got a good distance here between the black and the red MA on the MACD. Here they're intertwined, they're wrapped around each other, they're hugging and swapping roles constantly. Here's the close under the 14. So you could still sell that at 51, 50, 55. We're now at 49.67. So that's a couple hundred points when you got the clear sell signal. And we rolled over momentum wise here, but you would have thought it's just more twisty business. But the head and shoulders is pretty clear there. There's no indication yet for strong reasons to buy, other than we're down. Maybe you think, oh, we're down, that means it's time to bounce, to turn around, which can always happen, tends to happen. But there's nothing here clearly screaming at me, you should be buying, buy biased. NAHL, again, we were cleanly and clearly over sort of the zero line. We started struggling, and then from the 11th of April, we were just under the zero line. We never got back above it again, and indeed from the 8th of April, we were never above sort of the 50 level, and we rolled over on the MACD back on the 3rd of April. So, and you've got your trend line break, you had your head and shoulders. There was so much telling you that it was potentially time to sell. It wasn't just one thing, it was a whole series of things all working in concert, including price action, which is the most important thing. Not much gave away in Rinia, to be fair. What was this last high here? On the 9th, and then it just fucking plummeted. Percentage of stocks under the 50. Yeah, this was the other thing, because we all spotted that the percent of stocks over the 50 was, collapsing back here in January, February, as we were marching upwards in what's turned out to be an extended fifth wave. And NAHL was weak. We kept going below zero, in this sort of period of time. Where were we? January, February. I mean, it is. And it looked like we had negative divergence on NIAD as well, but it all came to nothing. So I was early as well. I was actually involved here trying to short. I was early. We were early. Obviously, we broke back out. We reset the MACD, and we've gone all the way back up, but we've still diverged. Still negatively diverged. The histogram's rolled over. MACD's rolled over. And then this has rolled over. So, I mean, the whole thing was... but the tell on the weakness came far too early to be useful. And, I think I just lost a bit of money shorting, to be honest. High beta, low beta. Again, we flattened out. We reached the high here back in December. And we've just flattened out. We've never exceeded since then. And we finally dropped off. So, again, it was just a long signal of weakness, but you should have still been buying because of what price was doing. But I was selling. Haha. Metals have gone fucking ballistic. This move from 2000 to 2400 coincides with this low here. You had the divergence, you had this narrow channeling action. As soon as it broke out, it was long time, and me love you long time, it's gone up close to 25% in a couple of months. Less clear now. We're under the 14. We're between the 14 and the 50. We've kind of rolled over an MACD. But this was like a big bounce. And again, obviously, from a price point of view, you'd probably be long biased. Silver against inflation. Silver's winning bigly here. Curving upwards, these three lows curling upwards, momentum curling upwards, and then it was just, we've been above the 14s ever since. Rip-roaring move, good long signals. What's there to say? 1, 2. Silver against rates. Histogram for a positive divergence here. We were over the 14 from 23. We just had a little dip underneath it at the pullback at 25. But on the whole, there was more reasons to be long than not. Go away. Silver against stocks, obviously hugely outperforming. And again, there's the 1, 2, 3 triple lows. But it was divergent, and we've just gone up cleanly since. Silver against gold. What a mess. I don't know how people find this chart useful. I keep looking at it for some reason, though. Oil against dollar Canadian. Apparently this is a ratio chart you're meant to follow. Well, a few years ago, 5 years ago, 10 years ago, I heard it was a good ratio chart to follow. I just only remembered it recently. Yeah, we're under the 14. MSD's rolled over. Can we stay above, again, sort of 80, 78, 77, 76? Or are we in trouble? ExxonMobil stock's been doing a lot better than the underlying commodity. I think the idea of the oil stock chart, oil against ExxonMobil, is when the commodity's doing better than the stock, you're meant to buy the commodity. But frankly, this is another one of those charts that I saw in use by other traders, including by pros. Maybe it's useful. It kind of looks just messy to me. I can't confess to paying an awful lot of attention to it. In crude, I tend to just look at the price chart. Natural gas against interest rates. Or against inflation, rather. Obviously, everything is subject to inflation, but natural gas here was very strongly outperforming. Underperforming. Briefly outperforming, hugely underperforming. And against oil. I mean, do you get a lot of meaning for these charts? I don't. I just don't. I find it's more useful for stocks and metals and things like that. These commodity ratio charts I'm not so sure about. It's better to just look at the price charts, I think. And we've already done that. We've already looked at that. And, yeah, looking for more upside in natural gas. Hopefully. And that's it.